Good day. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up for this Wednesday, June 24th, 2020. And right now we're looking at a market that had an interesting day. Look behind me in the sea of red. TLT was green. Everything else in the red. Everything. All sectors, everything. So what happened today? Well, in a nutshell, you had the Office of Trade of the U.S. put out that they're taking commentary right now to put tariffs on the UK, United Kingdom, Spain, France, and Germany. 3.1 billion in tariffs. We know we've been in a court fight with the European Union for years. They're trying to put tariffs on us. I don't know if this is a ploy in front of getting a deal done of something constructive with them before the election or real tariffs. It seems a strange time to be putting tariffs on, so I happen to think it's politics. When I take a look at what else, Joe Biden, 14-point lead in major polls over the president, his biggest lead. That eventually has got to get some attention. We still don't know who his running mate's going to be, and that's going to be very important for a man his age. It would be for me too. And you've got to look and see what that's going to be. But President Trump, again under the gun, and they'll say it's phony polls. Then COVID-19. Now, I have been talking about it, and in my newsletters writing about it. I don't think people are paying attention. You have records being set in Texas. By the way, now they're in Texas. Apple today shut down 7 more stores in I believe it's in Houston. Things are serious. Then we heard from Governor Cuomo, and he said that they're putting on restrictions if you come from any of the states with elevated COVID cases, and he listed them. There's quite a few of them. You have to go into quarantine for 14 days. So you might as well shut down any hotels that we're hoping they'd get going. I mean, maybe the other states can support it, but you're not getting California, Arizona, Texas, Florida. I can go on and on. Washington State, the Carolinas. You know, you can just keep going here because those cases are climbing so much. That spooked the market, because it's not this one-sided road and it's behind us. And I look at all the people on TV, protesters doing whatever, and at least half that I see on TV are not wearing masks. COVID cases going up. And what age group? The age of these protesters. I'm not saying it's just them. I read. It's that simple. Okay. So what else have we got? Well, if we take a look on chart action, this is XLK, and you know it runs with the QQQ. These have been the darlings of the market, no question about it, technology. And the 102.94 areas, we got above it. I said I wouldn't be surprised if you stall out. This is called a stall. I am not saying it's a top. It is called a stall. I don't know what it'll turn out to be. I know the market left its uptrend as defined by a swing line, because you now have a pattern of a higher high, and today's low took out Tuesday's low. So actually Monday's low. So now you have a higher high, lower low. That is not a trend. A trend is higher highs, higher lows. A downtrend, lower highs, lower lows. That's not a trend. Where do I look for support? The 18-day average of closes. Why? Because in the past, that's been the number that supported the market. Does that mean it's a buy? No. When you don't have a trend, why are you buying it? It's an area that's a look-see. You look to see what it's going to do. Well, where was the resistance? I don't know how many times you've listened to me, but I keep saying the first time you hit a Bollinger Band is where the pros take money off the table. And I know it's the hardest thing to do, cashing in because it's going to go to the sky. But now, if you came out at 105.43, on the close it's 102.27 and out of the uptrend. I don't know where it's going. When I take a look at the momentum, it's turned down. So the right thing to do is come out there with a tight stop, maybe on balance of positions. The wrong thing to do is be here trying to figure out what's it going to do next. What about SMH? Never did get up to that number, right? And what we have now is a pattern of a higher high, lower low. So it stepped out of it's sideways action. This certainly did not act the way that we saw XLK. Momentum turned down. The settlement tonight is still over the 18-day average. Even if it closes under it, you don't have the pattern of lower highs, lower lows to be bearish, and you don't have higher lows, higher highs, and over these numbers with momentum pointing up to be bullish. You're in a correction, and whatever it's going to do, it's going to do. XLI is bearish, but oversold. I'm thinking the pros are taking money off the table here because of the oversold condition. The trend has been down. I don't think you'll disagree with me. Lower highs, lower lows. First challenge of a major moving average, what do I tell you? I said it here at the 200 day. I'm saying it again. At the 100, I think the pros take some money off the table. Trend is down. Will they try to sell the 18-day average? I don't think they're going to try to sell anything because they're oversold. And is there a reason to be long? I don't see one. No matter if you shot up tomorrow 10 points, you'd have a lower low, higher high. I don't see anything there. I'm bearish on the energy spider. Lower highs. Now, just take a look with me. Where did you go to, though? You stalled here. So that becomes the problem. Forget today's action. You're already oversold. You don't need to be a hero. Who knows what it's going to do? There's points where you trade, don't trade. And I'm not telling you to trade or not trade. I'm calling what I see trends based on the same things I do over and over and over. Which brings me to something, by the way. My charting course, it's $179.95. I've lowered the price until July 1st to $99.95 as long as the person that buys it is a paid subscriber to either my morning futures plays or my full futures recommendation series or the Spider ETF video. It will come off that day, as I said, July 1st, 6 hours of videos, charting software, all my written recommendations. That alone, $60 a month. Think of what you're getting for the rest of it. And you need not start it the day you buy it. You let us know when you want to activate the course. Pretty interesting. Go to our website under the word education. You'll read about it, and that's where you do it. First, subscribe. If you're not a subscriber, do not buy the course first. Buy the subscription first, then the other, and we'll honor everything. Do it the other way. I don't want to deal with it. It takes too much of my time. QQQ. Where did we go yesterday? First challenge of the Bollinger Band. Now, back here you hit the Bollinger Band finally here, and you didn't back off right away, but you eventually did. You're playing on borrowed time. When you hit those numbers, you often, I wish I could say the word always, it's not accurate, not even remotely accurate, but often is what charting's about. You get a correction. And you had a big enough one today to step out of the uptrend. Now you got a lower low, higher high. Where should support come in? Well, in the past, it's been the 18-day average. So until it doesn't hold, I have reason to believe it should hold. That does not mean it's a buy there, though. What about the emerging markets? They're stuck at the 18-day average of closes. I think I've been consistent in this. They have a higher high, lower low, no trend. They're starting to go sideways in what could become a pipe. When Bollinger Bands, let's see if we have one. This is a pipe. When a market narrows in, as this is trying to now do, you develop pipes. And from pipes, price action, and it's like a spring. It's winding. It eventually bursts out of it. One way it could be up, could be to the downside. We're waiting to see what happens. I think it's just entering it. GLD. You hit the upper Bollinger Band there. You're still running, like I say, glue. And I used that in my futures video that I did today and the other. But I think the pros are taking money off the table. It is an embedded reading. I do think this market's going to get bought on the pullback still. Why? Trend up, bias up, embedded reading. So there's a number in here that I think the market wants to be bought at, and I'm not looking for this to fall out of bed. Different in GDX. Why? While the trend is up, you're overbought. It's the slow stochastic when it develops 3 days in a row over 80. Until that red line closes back under it, I say the pros start aggressively buying the market on pullbacks, not rallies. This is different. I think they just came out of their long position, and they certainly didn't get hurt by doing that. TLT, very overbought. So while the trend is up and the bias is up, one of my filters says, no, leave it be. It's too overbought. Where are you going? And I walk away. You know, trading is like you have to have a checklist. Do I like it? Don't like it. It's different than investing. Investing is a buy and hold strategy, isn't it? That's what your 401k should be. This is very different. FXE, higher high, lower low. I'm looking now for this market to base out in here and ultimately develop a bullish signal. I think the dollar longer term is going down, and I think this could be going up, especially if they get to their fiscal plan in July and announce something that is really going to move their economies along. So, as I said, my market research, go to our website. If you subscribe to the morning futures, the combo of the futures and the SPDR ETF, for the SPDR ETF, you can get the charting course instead of $179.95, $99.95, 6 hours of videos. See what I do, you do the same thing, then you join me as we do the same thing over and over in the subscription video. I think you'll find it very interesting. If you have questions, you can always call my staff, they'll answer them. I'm Ira Epstein, you have a good evening.